Eric Mwathe, going into the weekend of December 13th and December 14th, 2014. Let's take a look at the markets. On Friday, we saw a big down day with the Dow down 1.8, NASDAQ down 1%, S&P 500 down 1.62. We see that crude oil was down to fresh lows at down 3%. Gold was unchanged, and we see that the VIX was up about 5%. For the week, net, we see that the Dow was down 3.78%, and we see that the NASDAQ was down net 2.66% for the week, and we see that S&P 500 closed down 3.52 for the week. So let's take a look at how the markets do look like here in terms of the charts. We begin by taking a look at the NASDAQ weekly. Now we can see that the line we were expecting resistance makes sense. We've been looking at the tops. If you draw the line connecting the most recent tops on the weekly, we were expecting some type of resistance here. It took a while, but that seems to have been correct. And now we see the reaction after the market confirms uniform activity above this line and back below it. So that's self-evident that that is where we've been expecting resistance ever since this break. So there was a break here, draw a straight line, and we were expecting for the third time, just like before, the market had come here and stalled, which gave us this high, and this high came with uniform activity above that line and back below it. And so we were expecting something similar here, and it took a while, I have to say, but here we are. The market is now respecting that, and like I showed you earlier, connecting the tops was another reason why I thought somewhere around here pullback would make sense, but it took a while and looked like it might never take place. Let's take a look at the NASDAQ daily, and the NASDAQ daily still continues holding above the prior breakout. So on the daily, the market looks okay, because this breakout, ever since the market jumped above that, it has held and looks very good. The market is well above the 50-day moving average as far as the NASDAQ is concerned. So the NASDAQ does look healthy. One of the reasons why we had a big down day on Friday is because the NASDAQ moved below 50 on the daily RSI. Now, here is one thing we have to remember. We are going into options expiration this coming week, and over the last couple of years, it has more often been the case that the market has an up week during options expiration. Just keep that in mind, that the market has been moving higher during options expiration week. Now this line I draw here, so this green area is where the market has been finding support going back to 2012. As you can see on this daily chart also, this is where the market has been finding short-term lows. And if you had just followed this, it gave you nice entries in the market over the last couple of years, including this uniform activity below the line, back above it, and now we've come back to that general area. So it is not out of the expectation that the market could actually bounce right there in the next couple of trading sessions. So we'll see what happens. There's also a line connecting the prior lows here through these lows. And why do I draw it that way? Because this is uniform activity below the line and back above it, so that can be negated. And so the market has come back there, and that could be an area where the market could eventually find support. We go to the hourly for the transport, for the NASDAQ. Actually, that's the 30 minutes. Take a look at the hourly for the NASDAQ, and we can see that the market has come back to this line here on the hourly. This is another reason why the market, in my opinion, could actually have a reason to bounce. If the market moves higher early on in the week, in the new trading week, like that, and showing that this is improving technical strength while the market has been making lower lows, then that is a technical reason for the market to bounce. Of course, we do need the market to start moving higher early in the week to confirm that this is actually lower lows with improving technicals, which is an indication of a market that wants to move higher. So that's one of the things we can look to is if the market finds support early on in the new trading week. It could also coincide with this line, which has been used by the market recently for a nice breakout and an entry here, which took the market to all-time highs, and since then it's become support. I've been talking about this for a while, that this is where the market has been finding support. And now uniform activity back above the line, uniform activity back above the line, and if it can confirm double bottom uniform activity back above the line plus improving technicals as the market makes lower lows, then this is where it would not surprise me come the new options expiration week that the market actually bounces higher. Now for that to take place, then the market is going to have to find a way to move both MACDs above zero. You can see how the market has started reacting slightly negatively over the last couple of days because both MACDs are below zero. A good market always has the MACDs above zero. So one of the problems I can see here is MACDs below zero is a negative for the market short term until the market can correct that situation. We go to the Dow weekly, and as you recall, we were talking about the RSI line right there. Let me draw that line. It seemed like the market would never respect that, but now it has. So that expectation there was not useless. It did help us in a way suspect, or at least hold into suspicion, this breakout. So we see it turning around here. And why is that line important? Line is important because the last pullback in the market took place after the market made highs and stalled there, which was this level, before this shallow pullback here. And so we've come all the way back and seem to have found resistance on that level also. Now the one thing we can see here quite clearly is the market is coming back to test 17,279. The market closed at 17,280. So it's just about less than a point above this prior weekly closing high. So in truth, the market broke out and stayed above that level for about 5 straight weeks, and now in 1 week has come back to test that level. If it can hold above that and bounce, then that suggests that the breakout is still good and the market is still healthy. So that's something we can watch. Also on my weekly, I see a line that has been on my charts for a while, and it's right there. Now this line has been on my charts ever since these lows were formed, and so we had a straight line. The market has been bouncing on this line on the weekly for quite some time. So we can see again uniform activity below the line, back above it. This was nice entry point there, and we used that to go long at the time in October, and we see the market has come back precisely to the line. So it would not surprise me that the market finds support based on that hourly chart RSI analysis. Go to the daily chart for the Dow, and we can see clearly that the market has come back to the prior daily closing high of 17,279.74. The prior daily closing high, so it is back there, and it is also happens to be where you have the 50-day moving average. So it could conceivably bounce, or if it breaks below the 50 and below the prior daily closing high, then now we have a market that is not acting well. Also, if you're a bull and you want a reason why the market can bounce, is this is where the market has been finding support on this daily chart for quite a while. Every time the market has come here, we've seen a strong bounce, and this is the level around 30.90. Every time the market has come here, we've seen a bounce. Uniform activity to the line and back above it, we saw a bounce there, and so now we are very close to touching that line, which is an area where the market has been doing well. The one thing I did note on the Dow Transports weekly, on the hourly, my bad, is this, again, this line has been on my charts for a long time, and this is where the Dow Transports have been bouncing. If you use this for a bounce on the Dow Transports, then it's been guiding you. Every time it bounces back above that, the market moves. Even most recently, there was a short-term low there. So all it needs to do is start moving above this level and show that this is being respected as a support zone, and the market could actually not be as bad as the close on Friday felt for traders. Let's take a look at the S&P 500 weekly. And you see that this channel we've been talking about on the weekly for the S&P 500, we were suspecting that this could be resistance when it came back to that top side of that channel. That seems to be one of the reasons why the market is down this week. And we are back testing the previous high of 1020.40, and the market is below that. So the breakout is now in question. The more the market stays below 1020.40, the prior weekly closing high, then this market is in trouble. Also, let's watch and see if the market can hold above the 10-week moving average. It closed below it. It needs to be above the 10-week moving average for the market to be having strong momentum to the upside. Staying below the 10-week moving average is never a good sign of momentum, and more than likely indicates lower prices. We can see here that the market was making higher highs in price, but the RSI was not moving and making new highs. So that was negative divergence, setting up for lower prices. We also see that the line where we're expecting resistance on the RSI, if you've been following me the last couple of weeks, I've been talking about this level here. And yes, it did look like the market would not respect that after giving us this sell signal and this drop. We came back. My thinking was this would be resistance. It took a couple of weeks before finally it did confirm that, and also the back test of this line, all coinciding with this point where the market was trading at the end of last week, setting up for this week's down action. The one thing I haven't mentioned yet is keep in mind, should the markets move below 50 on the weekly time frame on the RSI, then that's going to suggest a big down week net. So watch those levels on the NASDAQ, Dow, S&P 500. Any drop below 50 on a weekly basis on the RSI is going to suggest a big down week net. Take a look at the S&P 500, and we are back to the 50-day moving average, which needs to hold. So holding there is good. If it breaks below the 50, then we can say that maybe the 200-day is the next line of support. This is where the S&P 500 has been holding firm over the last 1-2 years. This line has been very good in giving us entry points. Every time the market has been pulling back, we've been using this for nice entry points back into the market. All these points, I mean, very successful entry points on that line, and even here. So the market does need to be above that if it's going to bounce. Right now we see it pointing lower, which is not good. Now there's one more line of defense which has been formed over the last, let's go throughout 2014, and it is this line here. The market has been using this in 2014 for support, and so you can see that uniform activity below the line, back above it, that's uniformity, so that's a buy signal there, and that's why we went long at some point during these lows here, because the market was showing us uniform activity there. Now we've come back without any adjustment back to that line. If the market can bounce off that line, I would say that that is an indication that the market wants to move higher. S&P 500 hourly, and we see that this line extension, so there was a disconnecting these highs. Once the market moved above that level, which is here, we've had a nice run in the market to all-time highs there. So we take that line, so this information here extended, and you can see that the market is now using this line as support. It used it here, and since then we haven't closed below the line. If the S&P 500 can jump above that and show that this line is still being used as support, then my thinking is now that the next short-term move in the market could be lower. Now, for that to take place, the bulls need to move the MACDs above zero. As of right now, the MACDs are trading below zero. On my settings, I use two MACD settings, the smaller time frame and the regular time frame. So both of them need to be above zero if the market is to do well. Before I move on, take a look at the S&P 500 hourly again. And for a couple of days and weeks, we were talking about this negative divergence on the hourly. So the market kept making higher highs, all throughout here, higher highs on the hourly. But man, the RSI was not showing that strength. And that to me was a sign that eventually this pressure would push the market down. And that's exactly what took place. In fact, you can see this very clearly on the 30-minute chart for the S&P 500. So here we see the market making higher highs throughout this period, and recently right there. Yet the market was making lower lows. So that was a red flag in my opinion. Indication there was to wait for the market to pull back, and that's exactly what has taken place. Now let's take a look at some world markets. We begin by taking a look at the Canadian market, and if you think the US market had a down 1 week, take a look at the Canadian market. It is well off its highs, which were formed in September, and for the week was down 5%. And so one of the things you do notice here is the bearish crossover between the 13-week moving average and the 34-week moving average. So that's indication of in the coming weeks and months, more than likely we are looking at a market that wants to go down, just like we had a bullish crossover between the 13 and the 34-week moving average, which was, from a technical standpoint, one of the reasons why this market continued doing well in this period. Now we see the opposite here. Maybe this market, and it has been looking like it was going to stall. Over the last couple of weeks, we've been discussing this because of the fact that if you go back a couple of years, the RSI has been stalling right there. You can see that this was a stall point before this drop here, and also here. It came closed there and stalled. And the market has been relatively healthy ever since it moved above that blue line. So in this phase, this market has been good. So throughout this green phase, it's been a good market, as you can see. But now that we are below that, we see that now we seem to be in a bearish phase in terms of that Canadian market. And again, we see resistance, as we discussed, I believe, the last couple of weeks when the market was trading there. Also, on the monthly, you'll see that we are having a relatively big down month because the RSI is being pierced to the downside below 50. So the monthly cracking below 50 is one of the technical reasons, I think, why this market is pointing down, and pointing down in a big chunk, about 7% for the month already. And you can see one of the MACDs is moving below 0, which could be a reason for the accelerated move to the downside. Now I did note that on the daily, you got this RSI trading below 30.90 in the Canadian market, and so for sure, unless it moves back above this number on the daily RSI, this market should continue being under pressure. This is not the only market to be under pressure, of course. If you take a look at the Brazilian market, ever since we had seen this resistance on the monthly RSI, this is a long-term monthly chart, obviously. Ever since we had cracked below that in 2011, which gave us the highs there, this market has been finding it difficult to hold above that line. And you can see once it came here and gave us uniform activity back below that red area, our suspicion was this market was due to go down, and now we see it looking like it could break this long-term trend line that goes back to 2002. So we are right there on the edge. Below that, that's a bearish market that could really open the floodgates as far as that market is concerned. Take a look at the daily for the French market. If you remember last weekend's video, we talked about possibility of resistance because the market had closed right there on Friday, somewhere around there. We were expecting resistance on this French daily chart, also because the RSI was giving us a level of resistance connecting the highs. So the pullback this week, in my opinion, makes a lot of sense. And there was also a sell signal from this line here, and this line had given us the high. As you can see, uniform activity there, resistance with uniform activity there, which is this high, and now we came here and stalled on the RSI, and the price eventually obliged. So we see that. The one thing I do note, just like the Dow, and the S&P and the Dow Transport, somewhere around here, it could easily, if it wants to, with a good up day, form uniform activity like that, and it could bounce short term. So depending on what happens, this is either if it trades below that level, in other words, if it does not find support right there on that blue line and trades lower like it's doing, then we should expect lower prices. Take a look at the weekly for the French market. And man, when these things play out perfectly, it's awesome. You can see resistance on the top side, as we were discussing at the end of last week or during last week's video. This looked like resistance territory, and the market did oblige with that smackdown this week, down 7%. Also, we had talked about the prior break of the RSI there, simple reasoning, which gave us that move off the highs, and we just draw a simple straight line like that. And we've come here once before and stalled, which was that high. We were suspecting this could be also resistance area, and that's what happened. Also, one of the reasons why the market was down substantially, down 7% for the week, is because the RSI moved below 50. Let's take a look at the German market, the DAX, which at the end of last week had closed at new weekly closing highs. But there was a problem with that move, and we discussed that. I thought it could be a trap. One of the reasons is because of this channel here was being back tested. So ever since we broke below this channel here, we've come here once before, installed, came down, worked all the way back, and my thinking was that this could also be resistance area. So that was one of the reasons. Also, we were thinking that if it moves below the prior weekly closing high of 10,009.08, if it moves below that, that's an early signal of a market that is stalling to hold a breakout level, and that would be a red flag. So before the 4% drop, 5% drop this week, the fact that it moved below 10,009 was a sell signal in itself. We also see that we had come back to negative divergence. Okay, the market was making higher highs on a weekly basis, but the RSI stalled and did not move above 61.8. Whenever you see a market make a high and the RSI fails to hold above 61.8, that's the worst type of negative divergence. So that in itself was a red flag in my opinion. We were also suspecting that there would be resistance based on this level there. Why? Because it gave us the high. Oh, let's go back. It actually gave us this high during this resistance here, and we were expecting something similar. It's just that this time it turned out to be a perfect situation. Sometimes the market plays hardball, and it's hard to peg those types of moves. Take a look at the monthly for the French market. And the one thing I can say here is we can see that on the weekly, on the monthly, we had a higher close the last month or so, but the RSI made a lower low. So that's a problem. Just keep that in mind. The long-term monthly chart right now shows negative divergence, which the implication is that month to month, these markets could be in trouble, and probably we are looking at markets that could have already seen major highs. Of course, we never know until we're weeks and months removed from the current market situation. But let's move on here. Take a look at the FTSE weekly. And this one is perfect because there was this line and the market had come back to that level. So guess what? That's exactly where the market seems to have stalled. It makes a lot of sense in my opinion. That break, that was an easy one to peg just because the market was trying to rally, but it just came back to a line that had been established on our charts. We see a big drop, almost 6.5% for the week, as the RSI slashes below 50 this week. China continues to be good. Take a look at this China monthly chart. As long as it is holding above 69.1 on the monthly, I don't want to fight the trend there. It's a very powerful trend. Anything above 69.1. As an example, take a look at when it moved above 69.1 here. The price range was at 1750, It stayed above 69.1 on a monthly basis on the RSI from 1750 all the way to 6,000. So anything above 69.1, man, you gotta respect that, because when the market decides it wants to press higher above 69.1, you never know where the stop is gonna be. Take a look at Japan, and I think Japan also stalling at 18,000, just like the Dow, or just about. It makes sense to me for this to pull back also, because this line has been on the charts for a long time, and we had seen uniform activity above that line and back below it. So that's uniform activity, that's a sell signal, which was this high and a short-term pullback for a couple of weeks, couple of months there. The market came back here, kissed that line, which is this high, before dropping. It's come all the way back and seemed to have formed a double top, uniform activity there, which suggests that we should expect lower prices, not day to day, hour to hour, but week to week on that Japanese market. Take a quick look at the Australian market. I know most of you might not follow it, but it's always good to have sometimes an idea of what's going on around the world. And you can see a huge wedge on the monthly RSI, huge wedge. And we see that we are now breaking below that wedge on a bearish move. Also, the possibility of moving below 50 could suggest that could very easily develop into a sell-off as far as that Australian market is. We also see that the Indian market pulled back, but I'm not sure this is broken yet, because there's a line of support connecting the most recent RSI lows there, and the most recent support was here on the same level where it closed, which moved it to new highs. So as long as it's holding on this line, you can never be too sure. Alright, that's one reason. Also, there was the prior highs on the weekly RSI. It had broken out here, which was this nice entry, and since then it just took off to the upside. So we draw a straight line like that, and you can see again the market has used the same level to find this short-term entry. If it can bounce on those two lines and move higher, then that's gonna be all it needs to have a technical reason to bounce. Below those two lines, let's say trading underneath those two lines on a weekly RSI basis is gonna be bearish. For now, it looks okay. The other reason why I say that is the monthly continues to hold above 69.1. Okay, on the daily for the Indian market, you can see that there was a nice entry here on the daily, and this entry was off the lows here in February, and the market had this nice run. So we draw a straight line there. You can see that the market has used this once before for a bounce, which was this lows, and it's come back here. All it needs to do is bounce back above that line with uniform activity, and there you have it. Otherwise, if it doesn't do that, and if it stays below that line, then that's going to be a sell signal. So trading underneath that blue line is a sell signal for now. If it bounces back above that line with uniform activity, then maybe there's hope. There's also the fact that it's trading around the 50-day moving average, which it needs to hold and defend if it's going to continue moving higher, and also this trend line connecting the lows there and this recent lows. If it holds above those two, the 50-day moving average and that trend line, then it's still a good market. But if it cracks below those and trades in this general area on the daily RSI, then maybe there's some downside pressure. Take a look at the Russian market, which was down 14% this week alone. Why? Because the RSI moved below 30.90. So the fact that the RSI jumped and cracked below 30.90 is the technical reason why we have this big candle there. Now, one of the reasons why I thought this was a market to short is because the monthly RSI moved to 3-year lows, and that's a requirement if you want to find some of this nice cascading stock. So once the RSI on the monthly moved below to 3-year lows, which was somewhere around this break here, then that's could have been your reason to go short this instrument. We also see that the MACDs were also making 3-year lows, so there's your second requirement, that the MACDs also moved to 3-year lows, and it's something they were doing. In fact, one of the MACDs was already trading below zero. In fact, both of them are trading below zero. That's why the market is weak. So the minimum requirement there was met very easy. Take a look at the SVXY, which is inverse the VIX, the volatility instrument. We spent some time the last couple of weeks talking about this one. I was thinking that this was giving us a sell signal and a buy signal for the VIX, short signal for the market. In other words, this one moves with the market. And so why was I saying that? Because I drawn a line. This instrument was finding support on this line here, and there's no argument. It's been bouncing on the 50 for quite a while, using the 50 for defense, moving higher every time, and with uniform activity, bouncing on 50 level. Okay, my thinking was that once we broke below that, it could start giving us bearish crossovers. You can see here it moved above 50 and then back below it with uniform activity. That was why I was expecting this thing to go down, and it makes sense that it's down 25% or whatever, because there was another line we had drawn which was a back test like that. So this line connects the lows there, this lows through this lows there. Once we broke below that, what the market has done is come all the way back to test that underside. My thinking was that would be resistance, and as the RSI moved below 50 this week, you get this big candle to the downside. So that makes sense. Let's take a look at Apple. So why was Apple down 5% or 4.5%? Is because the weekly RSI moved below 69.1. Another reason is because we are looking at the monthly RSI moving below 69.1, which is why it's down almost 8%. And also the fact that recently here we see it cracking below and moving below 50. So is it broken? I don't think it's broken, because it is still trading above the 50-day moving average. So I would not say the stock is broken by any means. Also, we can see that this move in the market, this move in Apple began, let's say here most recently, with this nice move here. So we just need to find out where that move began, and you can see it began right here. If we draw a straight line like that, the market has used this before for a bounce, which is this lows there, and this uniform activity support, which is this nice entry, and the market stopped right there. So again, the theory here is if the market can bounce early on in the week on this line, then that's an entry level, which also happens to be around the 50-day for that stock. Okay, I want to end by taking a look at a long-term monthly view for the NASDAQ. Let's take a look at the NASDAQ here. I want to go to a long-term view. Now that the NASDAQ is back below the prior 2000 monthly closing low, this market could still have some more downside. So I believe that price was 4696, which was this monthly closing high. Anything below that on the NASDAQ is bearish. Now the NASDAQ does still, as of right now, continues holding above 69.1 on the monthly, which is bullish. Take a look at the Dow, and we can see that on the monthly for the Dow, it is now below 69.1. So we can see that some of the markets are not as bullish as they were, now that some of them are below 69.1. Take a look at the SPX, and the S&P 500 just slipped below 69.1. So if the market is not above 69.1, then we start wondering whether we have even more downside in the market. If the market can reclaim the level back above 69.1, then the bulls are back in control. Right now, if the market is going to stay below 69.1 on the monthlies, then the bears are in control. So this is the line to watch for who is in control. in terms of how strong this market is, and also the opportunity and the idea that the market can go lower depends on how the market defends 69.1. For part 2, I would encourage you to go ahead and log in. Otherwise, the rest of the video is gonna be on part 2 for subscribers. Enjoy your weekend. Eric Muathe, good luck, peace, and blessings. Woo!